Hey, good afternoon, everyone. This is Kirk here again with the Bulls and Bears. It is Thursday, June 11th. Before I get into any charts of the market, as you can see right now, what I have open, and this is a little bit different, but I just want to highlight one point, is actually I have open the QQQ of the NASDAQ ETF here. You can see the NASDAQ up in the right-hand corner. And this is actually a look at the options for the NASDAQ. You can see what we're looking at here at the June quarterlies, actually, that end in about 19 days. And the thing I wanted to point out here is these June 35 puts here. You can see that today's volume just on these puts alone was almost 141,000 exchanges here. That is a huge, huge number for an index like this. So for all of those people out there that are wondering or that had not previously heard me say this, but for option writers, the reason that you can write options so effectively is because institutions come in and they buy up puts and they buy up calls to hedge their positions. This right here is clearly an institution coming in. I think the actual block trades, if you go into it, was about 20,000 trades or 20,000 contracts that were bought by one institution and almost 120 by another institution. So there's no disputing that institutions are able to come in here, buy up these block trades here, and hedge their portfolios against the downside. And this completely makes sense considering how high the markets are. They don't want to lose anything that they've already gained. So what they're going to do is they're going to buy these options here and hedge a bunch of their shares with these June puts right here, hedge any downside. So clearly they're thinking that the downside is right around the corner here. Now again, I just want to point that out just as far as educational purposes. I'm not always going to show everyone these option screens, but this is a really good example here of why these puts in particular, and you can see I'm looking at the puts here at this 35 strike for the NASDAQ Qs is so important today. Okay, now moving on to an intraday chart of the S&P. This really kind of makes you laugh, honestly, to tell you the truth. A lot of people who still don't believe in technical analysis, I don't know what they would say about this type of movement here. I mean, I've had these lines here for a couple days now, and clearly we just keep bouncing right off of them. What's really important about what happened today, and I mentioned it on a couple posts here, is that the markets shot up early in the morning and hit this downward trending line almost exactly. Again, just a great target for any technical analysis trader. Then they broke up above the line, and I had said to numerous people, because there was a lot of people who emailed me about this and asked me, is this a breakout? Is this the big breakout? It would have been if the markets had closed above this level. If they had come down here and bounced off this level, which they looked like they were going to do just about 15 minutes before the close, then that would have been a pretty good breakout, a pretty good opportunity to start buying up here. But as you can clearly see, this thing, or the market, just really kind of made a fake breakout here. As I mentioned earlier this morning, it just kind of popped its head above here and did not hold throughout the rest of the day. So clearly anything above 950 here not really being supported by any buyers in the market. From here, obviously, we would need the market to kind of fall down here and retest somewhere around 930, 925. I've said these levels over and over again. They have to break below those levels for anything to get going on the bear side. It's just point blank. That needs to be done before anything gets going. So, with that said, there is a couple, or one thing that I wanted to point out to everyone real quick. Okay, this is a look at actually one of two longs that members and I are a part of. The other one is actually an inverse long, so basically a short position. This is really our only true long, and again, you can see I've moved it aside here so you don't really see exactly what we're trading, but this thing was up almost 5.5% today. And I've mentioned this numerous times, almost till I'm blue in the face with regard to this particular security or ETF. This is one of the best basing patterns I think I've ever seen, or at least I've seen in a long time. You can see here that the shares traded today alone was almost 100 million shares, when just a month ago there was about 4,000 or 5,000 shares afloat. So this thing has increased tenfold as far as the activity in the security. And mind you, this is not a stock. This is a complete industry here. This is a whole sector that is making this same type of basing move. So I point this out for one simple reason. If I were you, I would get to know what this is right here, because mark my words, this is a huge basing pattern here. The volume that is being supported right now at these levels eventually are going to take this thing up hundreds of percent. So that is my one little long idea in the markets right now. Obviously everything else that members and I have, and we entered into a couple more short positions today near the highs of the day. Clearly we are well positioned for the impending doom that is the next sell-off. That ends the video for tonight. As a reminder, the option writers report is going out Sunday as usual, so that leaves you just a couple more days to sign up for that. I think that this week will probably be the absolute last week for the 2-week trial. I've had a lot of people who are abusing and forwarding on that service to other people, so that ends that. So if you want to sign up for the 2-week trial, this week will more than likely be your last opportunity. After that, you'll have to pay to get it right up front. Okay, that ends the video for tonight, and happy trading.